This is Sovereign Debt, a podcast on greening the global economy and debt sustainability. I'm your host, Jill Doshi. Hello, everyone. I hope you're enjoying your summer holidays. And as you're hanging out on the beach or lounging by the pool, I thought you might be terribly bored and just wondering if only there was a podcast out there that I could listen to that would explain the special drawing rights of the IMF, because I know that this is just the burning question of the summer. SDRs seem to be everyone's headache these days. So I thought it would be helpful to get someone here on the podcast that could help us explain it all. So today's guest is Hoang Pham, who is a deputy division chief in the legal department of the IMF. He's an expert on the SDRs, and I'm thrilled that we managed to grab him during summer to come and talk to us. So thank you so much, Hoang, for being here today.
Thank you, Jill, and many thanks for your invite. I have much enjoyed your podcast over the years on sovereign debt, including those by my IMF colleagues. It is really an honor to be your guest speaker today, and I look forward to our discussion. And of course, hopefully to get to help our audience get over the headache on special drawing rights.
Exactly. And I asked around in the IMF and I said, okay, guys, who can come on the podcast and explain these things? Because we all kind of bounce around these terminology and these ideas, but I found that few of us actually really understand them. And your colleagues all unanimously recommended you to unpack it for us. It might not surprise you that you might be one of the few who actually understand the IMF special drawing rights. You also know that they are becoming more and more in our common discourse, kind of post-pandemic and the allocation, which we'll all get to. But before we get into all of that, could you start us with just the basics? What is a special drawing right?
Well, first, as a standard disclaimer, I would have to say that this reflects my personal view and not the views of the executive board or the IMF or the IMF management.
Fair enough.
So on your questions about the nature of the SDR, so the SDR is an international reserve asset created by the IMF to supplement the official reserves of our member countries. So it is not a currency, but it is a member country's reserve asset that the country can use as a potential claim on the freely usable currencies of other IMF members, which are the dollars, US dollars, the euro, the British pounds, Chinese renminbi, and the Japanese yen. So how does it really work? So first, it is created through the IMF's allocation to its member countries. So once allocated, members can use their SDR holdings unconditionally, including to exchange with other members for currencies, such as exchange with other members for the US dollars. So SDR allocation is not IMF lending. The IMF managed the SDR system in its SDR department, which is separate from our general department, where the IMF runs its other operations, including lending operations.
So is this the capital of the IMF or is this something else?
It's not the capital of the IMF. The IMF capitals consist of the member subscription, quota subscriptions. And its main holdings is members' currencies.
Okay.
So the IMF also holds some of its capital in gold and SDR, but it's a very small amount relative to its currencies holdings.
Okay, so the member countries, let's just kind of get the basics straight, because like I said, I want to go really back to basics and make sure that we all understand that before we get to kind of the funky current stuff. The capital of the IMF is actual money that in the normal currencies of the countries that everyone kind of has put in based on the kind of strength and size of their economies, right?
That's correct.
And then you say there is some gold and there's some SDRs, but generally speaking, it's real money.
Member currencies, yes.
Then the board, I guess, or the member countries decide that there is going to be this extra, as you call it, a reserve asset, these special drawing rights, these SDRs that are going to be allocated per country that they can use as a buffer in their reserves.
That's correct. That's correct.
And they can either hold them as SDRs or they could exchange those with some other member country for actual cash.
Currencies. That's correct. So the of course most members hold them, but if the member needs to use them, they can exchange for currencies, or they can also use that for what we call authorized operations. And the IMF authorized like 7 types of operations, but mainly the operations are used are loan payment, providing loan payments. It can be also for pledges, swaps. So those are the operations that are authorized by the IMF.
And most countries tend to hold onto these SDRs, or do some countries tend to use them more? Advanced economies probably just let them sit there because they don't really need them so much. Or emerging economies might actually kind of have a little bit more activity in SDRs.
That's correct. So the basically the member have the same rights to their SDRs, but depending on their need, their use could be different. So like advanced economies, since their balance of payment positions tend to be stronger, and they do not really need to use SDRs, and they end up holding the largest amounts of SDRs, partly also because they get the most allocation. So for other countries, particularly the low-income countries that have balance of payment need, SDRs tend to be used the most, mainly through exchanging for currencies, or they can use that to make payment to the IMF, make payment to other members, or what we call prescribed holders. Prescribed holders are international financial institutions that are authorized by the fund to hold and use SDRs.
When we're holding these SDRs, it's in the central bank, and then there's these other, as you say, kind of designated institutions that can hold SDRs. So that's generally the regional development banks, like the African Development Bank or the Asian Development Bank.
That's correct. They are the development banks. There are also currency union central banks, like the ECB is also one of the prescribed holders.
Okay, so these financial operations that you're saying where SDRs can be used can only be used with those kind of designated entities.
That's correct. 190 members of the IMF are participants in the SDR department, so they can use SDRs, they get allocations. The other users of the SDR system are those IFIs, international financial institutions authorized by the IMF, and then the IMF itself. However, the allocation that I mentioned earlier only goes to members. It doesn't go to IFIs, it doesn't go to the IMF.
Right. And we're going to get to the allocation because that's an important thing. But okay, but then so if I'm a country and I have my SDRs and I want to use them, I can use them as SDRs with these designated institutions, including the IMF itself. Otherwise, if I need a financial operation, I would have to kind of exchange those SDRs for actual other currency, dollar, yen, etc., and then I would be able to use it.
That's correct.
Okay, so that's the basics.
Yes.
Okay, we're making progress. Then we get to the kind of issuance of SDRs. And as you've already mentioned, we recently in 2021 had this kind of exceptional it was called a general allocation, I think, but it was quite exceptional in its size. It was 456.5 billion SDR were allocated, which is at the time an equivalent of about 650 billion US dollars. And those were then created by the board and its members deciding that we wanted to give extra support to the member countries. So when those were decided to be created or allocated, it happens based on the quota of the countries in the IMF system. Can you kind of explain that a little bit more, what that means and how those quotas work?
The latest allocation is the largest one in the IMF history, as you mentioned. And it's called a general allocation because it is done under what we call the Article 18 of the IMF Articles of Agreements. It is created to basically supplement existing reserves asset of members.
Mm-hmm.
The mechanism is that is allocated in proportion to members' quota shares in the IMF. And quota, as we mentioned earlier, which is really the capital subscription by the members to the IMF. So the larger shares a member has, the larger allocation share he would get from the allocation itself. So for example, the US has more than 16% of quota shares. So then the US would get more than 16% of the total general allocation. The decision to allocate is a decision by the Board of Governors. So this is the highest decision-making body of the IMF. It is, of course, proposed by management. It has to be agreed, concurred by our executive board. The final decision is with the Board of Governors.
The Board of Governors. Okay. And can you give us a little bit of context of like why this extraordinarily large allocation was made? I mean, obviously it was done kind of around the time of the pandemic and all, but maybe just kind of unpack that kind of thinking in the context.
Right. So the general allocation is actually an exercise that the fund conducts every 5 years, where under the Articles 18, and basically the article requires a fund for every basic period, we need to make an assessment of the long-term global need for additional reserves, and whether the SDR allocation could help to support the build-up of the reserve needed for the global economy. So in the 2021 allocation, the fund estimated that the total additional need for reserve would range from 1.1 trillion US dollars to 1.9 trillion US dollars. So it's about like 600 billion SDR to 1.4 trillion SDR until 2026. So we make the assessment, an estimate for 5 years forward looking from 2021.
Okay.
So, and based on that, we say that, well, how much is an SDR allocation here can help to fill the gap? And the amount of 456 billion SDR would account for between 30 to 60% of the estimated long-term reserve need. And the decision was proposed and approved by the memberships at that time at our Board of Governors level. I forgot to mention earlier, the decision requires 85% of the majority of the total voting power. So it's a very high majority. It means that most members have to agree with that. So even if there was such a need, but there's no such support, there could not be an allocation.
This is basically then more or less what you're saying. It's a kind of global decision of a global assessment of the need and a global decision to take action and say that, okay, we are going to allocate this.
That's correct. The pandemic years really rallied the support for many members, the global community. So that helps to push through the allocation. And the allocation in our assessment, staff assessment, we have to also assess that the allocation would help avoid economic stagnation and deflation, as well as excess demand and inflation in the world. So the assessment is not just on the reserve need, but it has to try to help to avoid stagnation and deflation, and does not cause inflation.
Right.
So that is the whole economic assessment that fund staff has to make and have to explain to our executive board and Board of Governors.
And then you say generally this assessment happens like every 5 years, but generally there's not an allocation, correct?
That's correct.
So there's only been a few times in history, right? I mean, I have kind of a list here, but I don't actually know if this is a complete list or if these are just kind of the notable ones.
So the list is also published on our website. There was only 4 general allocations since the creation of the department, the SDR department in 1969. So over those years, there's only 4 allocations, and the 2 largest one was in 2009. Just happened at the same time at the financial crisis, and then 2021.
So that makes sense. So at these moments of high stress and uncertainty, the board and the member states have decided that it is necessary to create this extra buffers.
Of course, it has to be consistent with the purpose of supplementing reserves asset. But at the same time, the allocation would help members, provide members with more fiscal space, especially those more vulnerable in the years of the pandemic years. They certainly have more fiscal space with the allocated SDRs.
Okay. So we decide, okay, we're having this extraordinary moment in history. We, as a global community, decide to take action and to kind of create and allocate these SDRs. But then, as you say, kind of they're allocated based on the capital and the quotas of the member states. And so kind of somewhat paradoxically, when we allocate them, the biggest chunk of these SDRs, to use a very technical term, go to the advanced economies, those with the larger quotas. There then starts a whole conversation around reallocation of the SDRs. What are we talking about there?
That's correct. At the time of the allocation itself, and even during the discussion of the allocation, the idea of rechanneling SDRs. Next step after reallocation, when members with extra SDRs, particularly advanced economies or large emerging economies, can rechannel their SDRs through other entities, particularly IFIs, other international financial organizations, and those can use that to lend to countries that in need. So those are we already discussed that in the context of the allocation, and right after the allocation itself in August 2021, the discussion already started. And the channeling happened first with members lending to the IMF own trust, which is the PRGT, or the Poverty Reduction and Growth Trust, the existing trust that the IMF has. We then established another trust, also in response to our members' request, which is called the RST, the Resilience and Sustainability Trust, that are designed to support members in their dealing with challenges relating to climate change and pandemic issues. So the new trust mainly financed so far by SDRs provided by those members with extra SDRs.
Okay, so we have a whole other episode. I don't know the number offhand, but with Yan Liu on the Resilience and Sustainability Trust. So I'm going to tell my listeners to kind of scroll down and find that one and listen to that one as well. But I do want to kind of stay on that point for a minute, because part of the allocation, the original allocation or the creation of these new SDRs, it was in response to the pandemic, but it was also kind of, I think, in somewhat in anticipation of the needs of adaptation to climate change. And so the RST, I think, was being conceived at the same time as the allocation in some way, at least in kind of on the back of an envelope, in the sense that there would be some sort of new trust that would be dedicated towards pandemic preparedness and climate change adaptation. So if I'm an advanced economy and I've got a lot of SDRs, I don't particularly need these SDRs, so to speak, and I want to help these efforts, what does it mean to reallocate? Like, am I just giving that money away? Am I just transferring it and saying, I don't need it, here's a couple tens of billions of SDR? How does it work? What does that mean?
Of course, we can talk more about the cost of those channeling, because SDR certainly the channeling is not free, and it may come with risk. So from the perspective of advanced economies, when doing it, they have to look at a few things. First, legally, can they part with it? Can they exchange that for something else? Because channeling means that you lend SDRs to another institution that can then provide loans for example, to low-income countries. So
Okay.
By lending SDRs, first the country has to see whether within its own legal framework, is it okay to do that with this type of assets? Okay. And secondly, then what they get in return, can it be treated also as reserves? So they have to look at what the claim on that can continue to have the liquidity nature and the safety nature of the reserve asset.
When I'm reallocating my SDRs, if I don't want them, I'm not giving them away. I'm basically lending them on to something. And like you say, depending on my legal framework, I might need to do that in such a way that I haven't lost anything.
That's correct. That's because the SDRs is not free for those members. We can talk about that financial structure of the SDR. But legally, from the fund perspective, the member can donate SDRs. So they can give away.
Oh, they can give away.
Yes, they can give away, but it comes at the cost. And we have not seen the donation of SDRs. Maybe it was done in the 60s, late 60s, 70s, but in the last 35 years, 40 years, we haven't seen any donation of SDRs. We'll talk about the cost of SDRs, the benefit and the cost of SDR, because why advanced economy would have to incur costs if I donate SDR. So basically, SDR, when it's allocated to a member, the member would have higher holding of SDR. And then the member would benefit from the interest on their SDR holdings. So the higher SDR holdings they have, the higher interest they receive. But at the same time, on any allocation, they have to pay charges. So they have to pay charges on allocations. So if the holdings and the allocations exactly the same, they cancel each other. So however, if they use SDR, so their holdings lower than their allocation, then they have to now start paying net charges.
Oh, and no one wants to do that.
No one wants to. That's why donation is an issue.
And even if someone wanted to, their parliament would probably stop them, right?
Exactly.
Okay, so the reallocation or rechanneling of even in advanced economies, SDRs comes at some sort of cost that needs to be covered. So they either need to assume that cost themselves and say that's part of our kind of gift, or there needs to be some other compensation going on.
That's correct. If they lend SDRs, they have to make sure that what they get in return is something liquid, something safe to be treated as reserves, and at the same time they get some compensation for the SDR interest that they have to pay on what the loaned SDR. So the IFIs that receive the loan may need to commit to pay the contributor the same interest rate that they have to pay. So that would make their cost neutral.
Okay, so if I'm a country and I've got too many SDRs, I want to rechannel them into something for the good of the planet and humanity's life on the planet, right? And I want to do something good with this, but I'm going to incur a cost. So I could say I'm going to rechannel them. Let's just keep it easy for now into one of these trusts, like the RST or PRGT. I'm going to put it in there, but that's going to come at a cost to me. So that is then built into the IMF or the recipient of that trust fund paying the contributing member. And then that cost is then passed on when that trust is lending to the other member countries.
That depends on the financing structure of the trust. But it's true, the trust would need to pay the contributors, and then how they get the money to pay that interest amount, depending on whether they have the resources to pay. Like the PRGT currently is structure that we have we call subsidy resources. So it would fill the gap between what we get from members who borrow from the PRGT to get to pay the creditors to the PRGT. But if you don't have enough, then we have to charge the borrower more.
Okay, so that makes sense. And then presumably every country that wants to be a contributing member into these trusts, probably each one of them has their own rules and regulations and laws about what they can and cannot do.
That's correct.
This is some of the nightmare of running and creating these trusts.
Absolutely. If you talk to our colleagues in the finance department, so many of them spend hours and days talking to contributors to go through all of this. potential obstacles.
So is this then, to be fair to these advanced economies and stuff, is this some of the delay in kind of this reallocating of SDRs? Because, I mean, let's be fair. And again, I'm not trying to put you on the spot or anything, but just there was this creation of these SDRs in 2021. We're now midway through 2023. There is still kind of, I think, some anxiety of why are things taking so long? Like, how do we get these resources out the door? How do we actually kind of do this? So is this part of the delay? Is just because it's just all of these complications of getting through what everyone needs to do?
The rechanneling to the BRGT and the IST, the IMF trust, actually take place quite quickly. Although we still need to continue that, given the need of our memberships to borrow from this trust. However, for another potential channel to channel SDR, which is to for advanced economies and large emerging markets to lend to other IFIs, the process has taken place for quite a long time. The key reasons, again, are the considerations by contributing members, whether the structures of those IFIs to hold these SDRs would be safe enough, would be liquid enough, whether there would be a mechanism to compensate them. Also, another element is that when we have a specific proposals from those IFIs and member countries to conduct those channelings, the IMF itself would also have to take into account the implication of all of these channelings. So this is really very deal specific. We need to see the specific proposal to make the assessment.
So that's getting to like kind of the use of the proceeds in a way.
That's correct. The use of the SDRs.
Okay, so it's not just the mechanism of the rechanneling and the kind of financial kind of compensation to the contributing members and all of their kind of legislative whatever headaches that they need to do the rechanneling. It's also then you, the IMF, have to kind of vet, well, what are those SDRs going to do ultimately?
That's correct. We, as a manager of the SDR system, we have the responsibility to ensure that all of these uses are consistent with the purpose of the SDR system and the smooth function of the SDR department. But it's more like the obstacle so far is really our contributor side and the IFI side, whether they come up with the specific proposals yet. There need to be political support at different levels for that to go forward.
And then it's safe to say, from kind of what I'm understanding, is the SCR reallocation is mainly going to be, or conceived to be, either through some sort of the RST or other trusts of the IMF, maybe existing or future, or directly to the other IFIs that are these designated institutions that can hold SDRs, right? And so then it's how they would then deploy those to their member countries. It's not so much like country X reallocating it to country Y. It's usually going to go through this system.
The channel that you talk about is through the other IFIs, they call prescribed holders, by the way.
Okay.
So that is a subject to a lot of discussion nowadays. The last channel of direct transfer among members, they can always take place. This could be the direct loan between member A and member B, but there would be the risk for those lenders, because when they lend, the claim they receive, would that be treated as reserve assets? So that's the biggest issue for them.
That goes back to the kind of contributing countries issue with its own SDR and its own reserves accounting.
That's right.
So there has been this idea kind of put forward, particularly by Brad Setzer and some others, about an SDR bond particularly of the World Bank. I don't know if you can or want to talk about it, but I thought it sounded like a pretty clever idea. I also, know and like Brad, and I think he's always got good ideas. It seemed like an elegant way of perhaps getting SDRs out of certain countries and into the hands of designated entity or prescribed entity, such as the World Bank, that we already know presumably how it's going to use those proceeds and kind of do it. So it seemed like a pretty smooth way to rechannel those resources. Can I get you to comment on that or kind of unpack that idea a little bit?
Yes. So Brett's proposal is that exactly like you said, is for countries to exchange their SDRs for SDR denominated bonds issued by like the World Bank and possibly also other development banks.
Right.
So it is one of the rechanneling idea. It also faced similar obstacles as we discussed earlier. So whether those countries would have the confidence that the SDR denominated bonds having the reserve asset nature, such as liquidity, such as the safety of those bonds, and also of course the cost. So those are the one thing that whether those countries can have that from the financial perspective, and at the same time whether those countries are willing to do that with the World Bank.
And if the World Bank is willing to issue the bond, I guess.
Exactly, well. And then the World Bank, on the World Bank side as well, are they willing to do that? Because as when they get the money, when they get the SDRs, what are they going to do with the SDR? And for and another element also is that from the IMF perspective, as a manager of the SDR system, we also need to look into the implications of any specific proposal that come to us. But that is, again, it's the second step. The first step is really whether there's such a proposal that comes to us. And Bread Ideas is absolutely one of the ideas.
SDRs seem to be everywhere. So like everywhere I go, everyone's talking about the reallocation. Why can it be faster? Where can we get it, this money, et cetera? And then his idea is out there. And it seems like at least from my perspective, quite a powerful one. And I think, the elephant in the room is particularly, I think, the United States, which as far as I understand, has the bulk of all of this. I looked it up before this. I think it's, correct me if I'm wrong, $162 billion worth of SDRs. So that seems like a pretty large chunk of money that could be potentially put to work.
It sounds right. I also looked into the number quite a long time ago. I don't remember, but it's the US has the largest holding of SDRs, just reflecting its largest quota shares in the fund. And that's why it got the largest share of SDR allocation.
Exactly. And it's presumably kind of a challenge for it, as we've talked about, to kind of to rechannel those and put that money to work in the most effective way. Have I forgotten anything in particular about, is there a glaring hole of something you're like, oh, she didn't ask about that?
Yes, I think that's one thing that I just want to reiterate against is that SDR is not free. Some members want to use SDR because they can use that unconditionally. But there's a cost associated with that. The cost, as I said, is the interest cost when their holding is lower than allocation. But more than that, a member's gross international reserves and long-term debt liabilities increase with any new SDR allocation. A member use of SDR would also lower its gross international reserves and increasing its long-term debt liability exposures. So that's why the members should carefully manage their use of SDRs. And there's also a risk to the whole system that any irresponsible use of SDRs may undermine support for any future SDR allocation. As you know, the allocation, as you mentioned earlier, requires a very large percentage of voting powers at the IMF Board of Governors. So any time of irresponsible use by members could really undermine the confidence in the SDR allocation.
So treading softly and a little bit slowly could be actually recommended.
That's correct.
Okay.
That's correct.
My last questions are usually just throwing it back to you. Maybe that was your last word in sense of tread carefully. Is there anything else you'd like to say to member countries, either who are looking to receive this support or those who are looking to reallocate?
there's a lot of optimism about SDR when it was allocated. And in fact, it's really like our managing director mentioned, is a booster for many economies, but it certainly is not a silver bullet. And this is still, members should treat it as an outstanding credit line when they draw it now, but there's the responsibility coming with that, and is the financial consequences that the future generation would have to be responsible for. And for that, also from the IMF perspective, we are in the process of assessing the implications, the use of SDRs following the general allocations in 2021. And hopefully in the next few months, we can come out with our lessons from this to share with the public.
Okay. Well, we look forward to that. And thank you so much.
My pleasure. Thank you.
Thanks for listening. If you enjoyed the episode, leave us a review and subscribe to the show wherever you get your podcasts.